Guest believes that, quote, while the December quarter is constrained by supply, products and services will remain resilient in 2023. Joining us now, Citi's senior technology analyst, Jim Suva, who has a buy rating on Apple. Jim, starting to see reports just in the last few moments that Apple iPhone production in China is starting to ramp up despite COVID. Is that what you're hearing as well?
Absolutely. And important to note, the data looks like it worsened and got the worst point in the month of November. And as you correctly stated, in December, it's getting better. And if you looked, a lot of times the iPhone 14 wasn't available for Christmas. This demand is simply going to be pushed out to 2013. And as we look forward to 2013, we see this as a buying opportunity, and we have a target price of $175.
Okay. So what is it going to take? Because right now, I mean, we're trading higher this morning on Apple, but strategists have certainly been watching these key levels, things like $30 a share, which we're now trading below, saying that that's, at least in the near term, bearish for trading activity. So what is it going to take as the next catalyst to sort of move out of that trajectory lower, at least in the near term, technically?
Yeah, the next catalyst will actually be, while they will not be attending the Consumer Electronics Show, which I know next week your team and I will be there, we do know that their earnings at the end of January will be the next catalyst. And we expect them to talk about and reconfirm these data points, which you talked about, of China improving its supply and the COVID supply chain issues starting to lessen. And that should set up for a better than normal March quarter. And then we expect them to talk about also Apple during their earnings call that they continue to push forward with innovation. And when we look forward to 2023, we see an AR, VR headset coming out. We see them starting to develop more of a foldable phone so I can watch on my top screen CNBC and see emails from you on the bottom screen without them interfering with each other. That will likely come out in 2024. We think these things will set up potentially for a good 2023 for Apple stock.
Jim, these kind of ebb and flow of the stock, with obviously it being on the downside recently, has occurred with earnings forecasts being pretty stable. It isn't one of the big growth stocks that's seen people really downgrade their expectations for profits. On the other hand, the action has happened on the multiple, right? You came into 2022 at like a 30 times forward multiple. Now you're down around 20. So what is going to happen with Apple that can happen independent of what's going on in the overall market to either rebuild that valuation or just, preserve it?
That's a very smart observation. And note, when the Fed was increasing interest rates, investors were on a risk-adverse portfolio. And so they didn't want high growth stocks. They didn't want tech stocks. And they shifted over to more defensive stocks. And now that we're starting to see, or hopefully that the Fed starts to level out its interest rates, we believe that investors will come back to the tech sector overall and start to have more of a risk appetite. So what you talked about what we call the valuation compression, which even though earnings didn't materially change a lot, investors were not willing to pay up as much because they were more risk adverse due to the Fed interest rates, the impact of COVID, the closure of China. Now we're seeing a lot of travel-induced demand destruction of, look, during the past week or two, Santa Claus had trouble delivering because people were stuck in airports, stuck in snowstorms. And now hopefully we look forward to 2023 with the Federal Reserve taking more of a plateauing of interest rates, hopefully, especially in the second half of the year, and then tech coming back in favor. But that's a great observation.